My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Okay, all right, listen to me. We know that stock splits, create no value whatsoever. They're pure sleight of hand, right? Do I have more pencil? They're financial alchemy. But stock splits are also exactly what we need to help keep this market moving higher, like we did today with the Dow gaining 290 points, S&P jumping 1.40%, and the Nasdaq pole vaulting 2.13%, in part because Apple and Tesla gave you some fantastic news about what I know should mean a thing, a 4-for-1 and a 5-for-1 stock split, respectively. Again, no new value, but boy, do people love it. There's a reason we have to feed the bull with more nourishing stock splits, and I'm going to tell you why. Years ago, individual investors deserted the stock market after the brutal losses of the dot-com implosion in 2000-2001, the staggering declines of the financial crisis 2007-2009. They gave up on the asset class. Every time they started tiptoeing back, it started looking enticing, something would go wrong. The flash crash, 2015 mini crashes. But in the past few years, beaten down individual investors, as well as a lot of younger investors, intrigued by low to no commissions, finally started buying stocks again. Despite all the graybeards telling you it's impossible to beat the market, despite the supposedly brilliant money managers warning you that the world was ending this spring, this new crop of investors just keeps coming and coming and coming. The rally in the market and their emergence, come on, they're no coincidence. These newbies, they weren't deterred when Warren Buffett told them to stick to index funds. Now, I got a lot of respect for Buffett, but he's never been good at timing the market. Hey, not his style, he'll tell you that. So lately, he's made some colossally bad calls, except for Apple. He did dump the airlines at the bottom. Some of that's American Express, that Wells Fargo. Whoa. Anyway, the new generation of investors doesn't really care about Warren Buffett. I mean, they think they only really know him from Dave Portnoy. That's right. They're more likely to follow this fellow Dave Portnoy from this outfit called Barstool, a.k.a. Davey Day Trader. This guy's a fascinating figure, a sports guy who got into stocks after the pandemic canceled everything, making it impossible to bet on sports. Now, I know he's a real iconoclast, Portnoy, who doesn't profess to know much beyond that stocks just go higher. You may have a complaint with Portnoy's complaint, but it's something that's made him very right over the past 4 months. Hey, if you just started trading stocks in March and April, I mean, stocks do just go up, right? I mean, that is his philosophy, which is why this guy's been running circles around much more sophisticated professionals, and they hate him. Now, I bring up Portnoy because he embodies this retail investing revolution, albeit in a more flamboyant, less fundamental-oriented way. I mean, the guy's having a great time. We're trying to make money. He does make money, too, but you get the picture. Individuals are storming the barricades, breaking through the condescending conventional wisdom that says it's impossible to consistently beat the market. Like FANG? Wait, was that hard? I got them from my kids. Yet people are picking stocks again using their own styles, whatever works for them. And for one, I love it. I love it. If we can help educate you once you're in and we've nudged the process in a positive way, well, then 2 cheers for capitalism, the vanguard of the revolution, the 13 million traders on Robinhood. Together with their Little John and Friar Tuck fellow travelers, they've become an incredibly powerful cadre. I know, because they've infiltrated my Twitter feed. Even before we became COVID prisoners, they were constantly stopping me on the street, and I loved that, too. It was pre-COVID. You know what their biggest complaint was? That stock prices were too high. No, not too high like price-to-earnings multiples or price-to-sales multiples. Not relative valuations. They were talking about, yes, the literal stock price. They simply couldn't buy enough shares in their favorite companies because their prices were too high. Which brings me back to stock splits. Every professional knows that this is meaningless. One share of Amazon at $3,160 is no different from 10 shares at $316 or 100 shares at $3,160. In theory, they're right. But in real life, people aren't calculators. If you've only got 10 grand to work with, then yeah, a $300 stock feels a lot different than a $3,000 stock. And I'm not denigrating 10 grand is a lot of money. I lived in my car for heaven's sake. I was doing it for 50 bucks. Anyway, this moment reminds me of the 80s and 90s, the greatest bull market of my lifetime, when tons of regular people made fortunes buying and selling individual stocks, including yours truly. Back then, the stocks wanted, the people, what did they want? They wanted stock splits. And executives, eager to please individual investors, would give them splits that had shock value that enticed many investors into the market. See, they were great signals. Stock splits were great signals of financial health and sales and earnings momentum. Like, look at me back then, occurring pretty much when any stock reached the $100 barrier and crossed it. But as individuals got blown out, big institutions came to the fore. They love ultra-high share prices because that meant lower commissions. When you're a money manager, you pay commissions on a per-share basis. So if Apple does a 4-for-1 split, each trade costs you 4 times as much, and they don't like that. In short, splits are good for home gamers.
House of pleasure.
But bad for professionals.
A house of pain.
But until recently, there weren't that many home gamers. Apple did a 7-for-1 split in 2014. Nobody seemed to care. Now, though, something's changed. Elon Musk, the visionary behind the technology company that's Tesla, has decided to split his $1,500 stock into 5 pieces, giving the Robinhood cadre exactly what they want. Maybe it shouldn't have gone up, but it did. It went up 13% today. Again, stock splits create no value whatsoever. I keep doing this so you get the picture. This is no more pencils. It isn't 2 large pens, a half and a half. We're talking about the difference between $1 and 4 quarters. Exact same thing. Slightly different presentation. You could say it's crazy for a stock to rally 13% on a split, and you'd be right. I say crazy like a fox. Because we know what happens after the split. This new cohort of investors, the ones who love low-dollar amount stocks, will start buying and holding these best-of-breed names rather than the darn penny stocks. They've been ignoring these. They've been buying crap. Now they're going to be buying good. And the thing about retail investors is that they can make more for a stable shareholder base than hedge funds because the pros have no loyalty. That's as soon short just go long yet. CEOs, wake up. I'm going to be on this topic like white on rice because the stock market revolution will be televised, at least by me. So let me give you know what? I know what you want. I'm going to give you the 10 companies that would be nuts not to split their stocks right here. Even as I know this creates no more value, then I'm not wrecking any more pencils. Like Ticonderoga is going to come after me. All right, 1, Amazon. I mean, the world leader in retailer and cloud infrastructure. I mean, are you kidding me? 2, Alphabet, which is showing signs of unlocking value. If they bring more fresh entertainment and sports to YouTube, the Robinhood crowd would eat this thing up. 3, Chipotle. Hey, the restaurant that's benefiting the most from the pandemic thanks to its digital prowess, the Tesla of burritos. 4, Netflix. Duh. 5, NVIDIA, the Intel of our era. I think CEO Jensen Huang could have an Elon Musk-style cult. I definitely get that kind of following if he'd split the stock. The guy's a modern-day Da Vinci in a black leather jacket. 6, Adobe, the digital media and marketing kingpin that's democratizes tech and helps businesses large and small harness the power of the internet. Shantanu, I saw you on another show. It's okay. 7, hold it. Yes, Costco. This is the best brick-and-mortar retailer on earth. I am a proud member, but I'm a gold star. My wife has got that black card, you know what I mean? It's got the lowest prices, the most motivated workforce, and a treasure hunt shopping experience. Costco demanded masks when no one else would. Now, everybody does it. 8 is Home Depot. Okay, this is the kind of story where individuals will be saying, wow, it was so packed. Oh, social distance. So packed, so good at responding to the virus. The best place to fix my house up with that low interest rate, I want to buy the stock. The stock's too high for the Robinhood crowd. They should reward shareholders with a split. 9, Facebook. Cheryl, Mark. I think the public relations problems are largely behind them, and the move to help small businesses sell their goods will be huge. Finally, 10, Microsoft. This thing just made it in the $200 club, which is the cutoff for what these new investors are willing to pay. They love to own Microsoft, but not at $200 and change. Sadia can fix that with a press release. Hey, look, I can go in all day. ServiceNow, Dexcom, UnitedHealth, Clorox, Shopify. They're all great candidates for a split, especially Shopify, which is knocking on the $1,000 club because they help people sell stuff online. Today, the idea that splits means anything, I know it's heresy. But you know, when I worked at Goldman Sachs in '83, it was gospel. Here's the bottom line. Logically, stock splits shouldn't matter. But since when is the stock market logical? In the real world, with real humans, splits obviously make a huge difference to a rapidly growing contingent of young individual investors. If you want the market to keep climbing, these 10 companies and many more need to start taking their cue from two guys I regard as pretty smart, Tim Cook and Elon Musk. Let's call them the best CEOs in America. Executives, right now I'm just begging you, look at what Apple and Tesla have done with their stock splits. Remember, the size of the price tag matters with this crowd. I've been around a lot longer than you have. You want this no commission paying crowd in your stock.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.